Thank you, everyone. It's our 1:30 Eastern time slot on Tuesday for the Advisor Network Connect 2026. For those of you who have been following along and joining multiple sessions, thank you. For those of you who are watching this afterwards, one of the 7,000 financial advisor representatives that are, again, part of our larger network, thank you. Thank you for watching this afterwards. We will make sure you're connected with the folks from Ethic and State Street as a whole. So if you have any questions, you can certainly direct them and ask those that way. But let's talk a little bit about the advisor network at a glance, right? So there's more than 7,000 total wealth management professionals as part of our broader community. It's an amazing statistic, something we're incredibly proud of. The advisor network's been around for 19 months. It's amazing to see the growth, but it's really because of you as wealth management professionals. More than 250 of you have joined our interactive collaborative platform, allowing you to connect with one another, consume material, consume and attend our calls live. So that's been wonderful to have you as part of it. We are hosting between 2 and 4 webinars a month, divided between our advisor to advisor sharing and our thought leadership from institutional partners, like the folks today here from Ethic. And we have our in-person options because we can't just do virtual. We have one live national meeting and 3 regional meetings, which we're very, very excited about. And so we're doing our virtual Connect 26 as we speak today and tomorrow. We're excited for folks to join us for several sessions, but then our live events really kick off at that point. Our Northeast regional meeting in August 11th and 12th in Saratoga Springs. In October, our West Coast Regional one-day event in Orange County. And then our flagship event, which is the Advisor Network Connect 26 in Las Vegas, November 10th through the 12th. We call it a flagship meeting, and you think, oh, it's some huge meeting. It's not meant to be. It's meant to be a group of dedicated advisors who want to learn from each other and learn from institutional partners, again, like State Street and Ethic and the folks that are participating in the virtual Connect meeting. So um, I would like to introduce some what have become some nice friends and partners of the Advisor Network, and that's Anthony Marcosi and Alex Leipel from Ethic. And what I'll start with for a moment is the way that we got to know each other is through the connection through State Street, and we're very thankful for that connection. But in spending a little time and getting to know what you have built in Ethic, it's a very unique niche, not just in the way that you sort of build and run models, but the way you're able to create a unique direct indexing platform and the ability to really harness those capabilities. So I'm excited to allow the both of you guys, if you would, to take a few minutes, educate the group. I would ask everybody here, feel free to ask any questions through the Q&A portion of our platform here on Zoom. And anything that you send through email, I'll make sure the guys can answer as well. So I'll turn it over to both of you.
Awesome. And thank you for the setup, Colin. Great to be on with you. Always good to see a Bills helmet in the background. My family's from Buffalo, so it's great to see that to start here. So, who do you have on the line here? You got myself, Alex Leipold, Chief Growth Officer here at Ethic. I've been with Ethic now 8 years. Over that period, we went from 0 to 10 billion under management. And Anthony Marcosi, who drives business development. So, you're in good hands here for the next 20 minutes or so. So, in terms of what we'll cover, we're going to give a background on who we are, who we work with, and what makes us unique. We'll separate that into 2 parts. The first part will be a deck, which will set the foundations of the things I just discussed. And then part two will be a platform demonstration where we bring to life all that we do from a technology standpoint before and after a portfolio is created. So to kick off here quickly, from an investment management standpoint, that's core to what we do here at Ethic. If you think about like what we're building for clients, we're focused on being the investment management platform of the future. And we find that there's moments for advisors to connect with their clients before and after a portfolio is created. So that's really what we're in the business of doing from a mission perspective. At the lowest level, though, the product structures that we create, we operate as a sub-advisor on behalf of an advisor, and we essentially are focused on delivering customization and tax smart investing across 3 unique product lines. We started focused on direct index SMAs. There's 2 product lines there, a low cost tax managed index specific strategy alongside a more customized strategy at the end client level. We have a fast growing model portfolios ecosystem We have an advisor-directed approach as well as a State Street-specific path. The final piece is UMAs, which is a continued growing space that we're committed to innovating in. So three different product structures with the focus on customization and tax smart investing. We're available on all the major custodians. If you think about the snapshot of where we are today, I mentioned the 0 to 10 billion. In the past year alone, we went from 6.5 billion to 10 billion. And a lot of that has come from the growth and focus on partnering with advisors and network style firms across the country. So on this next slide, we'll get into more detail on the type of clients that we partner with. So that 10 billion fits pretty evenly across two client demographics. Within those client demographics, I'll talk a little bit about the type of clients we serve. So in terms of client volume, the most clients we have are in our advisor channel. Two core clients we serve are independent RIAs in that 500 million to $1 billion range that is looking for an outsourced trading solution across SMAs, model portfolios, and UMAs. So we are hired as that go-to technology solution to create more scalable workflows and give firms time back to spend time with their clients. So that RIA ecosystem is a fast-growing space for us within the advisor segment. Alongside that, we partner with a ton of network style audiences like the Advisor Network, the Corients, the Beacon Points, the Cap Trusts, the High Towers, the Dynasties, the firms that are growing inorganically that need to create consistency in the platforms and the solutions they offer their advisory clients on the branch level. So that advisor segment continues to be a fast-growing space focused on that full offering from SMAs to model portfolios to UMAs. The institutional side is more focused on the SMA ecosystem, very tailored, hyper-customized portfolios for families, endowments, and foundations through investment consultants, as well as direct-to-family offices. So pretty unified growth across those two segments, but different pain points that we're solving for. So on this next slide, when I pass to Anthony, he's going to go deeper on those product lines to give more visibility before hopping into the platform where it will all come to life.
Love it. So we'll do one slide on direct indexing, one on model management, and then as Alex said, we'll get into the platform to showcase the advisor experience that we deliver. So on the direct index SMA side, these are all individual stock solutions. You're getting index-like exposure, but can personalize across key constraints from tax management to values alignment to factors. There's two different ways that we deliver today. At the highest level, right? We're typically owning anywhere from 150 to 300 names. We've tracked to over 100 different benchmarks to date in the equity universe. You could also create blended composites. On the left-hand side, you have a core direct index SMA offering really focused on tax management, $150,000 minimums. We headline around 15 basis points for this style solution. When we think about tax management, there's a few key components. Part one is a tax transition. How do you diversify a client over time, whether they're in concentrated stock with low basis or legacy ETFs, legacy mutual funds that they want to get out of over time tax efficiently? It's not an easy thing to do without the right tools and partners. So essentially what you do with Ethic is come into our platform, you upload a tax lot file, you give us the goal of where you're trying to get for this client's account, align on benchmark exposure, and we'll play back a few different paths showing the trade-off between tax impact on day one and tracking error to show, hey, what are some different glide paths for a client to think about diversifying on day one? Post investment, we monitor accounts every single day for opportunities to harvest losses. Typically see a trade 1 to 3 times a month within these portfolios, and then we'll report back on the platform. We'll give you a glimpse of that transition experience alongside the reporting here shortly, but really that experience from start proposal through to the lifetime of the account is what we want to focus on from a tax efficiency perspective within the bounds of a defined tracking error budget or really drift from that benchmark exposure. On the right-hand side, this is a bit more customized. We also headline at $150,000 minimums, around 30 basis points fees. This is for clients that want something more values aligned, more hands-on, whether you have an endowment foundation focused on religious values or a family across multiple generations or an individual that wants to do something more bespoke. We have a pretty robust experience around values alignment, everything from a questionnaire through to proposal generation and ongoing reporting to help connect with clients around what's important to them versus off-the-shelf solutions, same level of customization around tax management and transitions can be delivered. Direct indexing, right? There's now probably over 50 different providers. The market has gotten quite crowded. Where we're seeing a lot of success is direct index consolidation. It went from firms having two to three, four different providers for different use cases to firms wanting operational simplicity, firms wanting a really great client experience, wanting something more tech forward. And so Ethic has really seen a benefit from that consolidation play from legacy providers over to our solution. I'd say in the RIA space, we see a large volume of flows coming into the core direct index SMAs or volume of accounts, right? And then you have the larger accounts, a bit more bespoke and customized coming through on the right-hand side, just depending on client preferences and the types of clients that you're looking to serve. So a lot of success on this front. Again, we'll bring this to life in the platform demo that we're going to show. And then last slide here is really focused on model management. This is really the ETF mutual fund model ecosystem that we're delivering. Importantly, Ethic is not defining the model suites themselves. There's a few different paths here. We do have a partnership with State Street, as was teed up at the top of this call, but we are either getting inputs from State Street or directly from RIAs, and Ethic is taking the keys for all trading, rebalancing, and tax loss harvesting. I think some of the unique use cases here, as Alex said, firms that are in that 100 million through to billion-dollar range and said, hey, what got us here is not going to get us to the next phase of growth. We either need to hire 1 to 3 more traders to scale with this growth, or hey, maybe you're a firm that's trying to focus upmarket and we want to outsource the ongoing trading and rebalancing oversight for smaller accounts, sub $500,000, for example, without losing that level of service and attention. We see firms trying to think about client segmentation that way. And then the last piece is the tax transition work. So how do you take a client or how do you take a book of business and transition it to a new set of target models over the course of several years? That's where that tax overlay and tax transition really comes into play. So just in terms of the flavors here, you have State Street directed models. Again, that partnership there is driven by their investment solutions group. Firms can implement these models at zero cost for ethics technology to go and implement these solutions. They have their flagship models that are 100% Spider ETFs. They have multi-manager models that incorporate some third-party product. And then they have custom models where if you as an organization said, hey, we really like certain things, or we want to be a co-pilot on the asset allocation, we like underlying products, we like certain managers, but we want support from an institutional quality partner, that's where they could come in and help build a portfolio that incorporates a certain amount of spider exposure to offset that cost down to zero. These are accessible typically in that $25,000 range. They've also launched models down to $3,000 to $5,000 for smaller accounts. So that's one path. The others, if you say, hey, we feel really good about our asset allocation, it's something that's a differentiator here. We have a robust process around ETF mutual fund selection for these models, the types of collateral that we deliver alongside. That's where we'll work with RIAs just to ingest those models directly. But again, you're outsourcing all of the implementation behind that. From a tax perspective, we're aligning on a replacement universe. How can we think about tax loss harvesting in an efficient way? Just to close out here, how do we think about tax transitions here in the model ecosystem? Right? When you're coming from legacy positions, all we need to do is carve out enough to reach that model minimum, whether that's 5,000 or 20,000 to get a subset on model. What Ethic can do is essentially hold the legacy positions, whether that's ETFs, mutual funds, or individual stocks in that Ethic account. We could start to harvest losses on the model allocation and get an ongoing gains budget from your firm on an ongoing basis to chip away. So a lot of nuance here. The final piece that's important here too is just the operational considerations, right? We're a sub-advisor. We do a lot of help and support with custodial integrations, making sure firms are set up for success regardless of the path that's chosen. So with that, guys, what we're going to do is spend the remaining 10 minutes or so on a platform demo, and this will be high level. As Colin teed up, we are happy to spend time one-on-one as follow-up to this to get more specific to your scenario. but this is the platform that all of our partners get access to. You can see it has Ethic, it has our colors, it can be white labeled to your logo, your color scheme. On the left-hand side, you see different access rights. Depending on your firm structure, we would set this up in a way that's intuitive. Advisors could come and see prospects, households, client reporting, investment teams, or whoever's holding the pen on defining that investment sandbox through the Ethic platform can come in and see investment solutions, firm reporting, and then again, operating as a sub-advisor. Typically, you're coming through our platform to give us key account level instructions, things like withdraw cash, halt trading, change settings on an account, and our team will go and facilitate that at the custodian each afternoon on your behalf. And we're plugged in with about 18 custodians today. I'd say Schwab and Fidelity are the primary in the RA market. So with that, let's look at a couple other components here. We'll look high level and then we'll drill into a direct index and model use case. There's an investment solutions page where essentially, again, we're working with the investment decision makers to say, hey, which product sets do you want to implement through the Ethic platform? Let's define the sandbox so it's not the wild, wild west in here with access to every single solution. We could look at a sample model suite. In this instance, a firm came and chose some State Street models through this partnership, but you could also upload your own models, which we would work with you on through an onboarding phase. With each click, you can get a bit more information. So we'd empower your own models or State Street driven models. You could see things like brochures, commentary, trade rationale, fact sheets, all the way through, model comparisons across a risk suite, conservative through to growth, and the underlying tickers that sit within. So a nice transparency tool to empower, again, your model suite or a partner-led model suite. And then ultimately, this is what I find most advisors being interested in is how does this actually connect? How do we actually get the ingredients for an account over to Ethic to go and implement outside of just this interface? This is the trade instruction form that we get. There's two pieces to it. One, we typically do bulk transitions and onboarding and would help you guys through that in a more seamless way off platform. But any new account is coming through the pipes here. So you could see you're opening a new account, you're telling us the custodian, whether that's Schwab, Fidelity, or elsewhere. We're getting key account information. You're selecting if you want to allocate to a direct index SMA or a model. On the model side, you're selecting a suite that you want to allocate to. You're selecting the risk profile. Here's a growth scenario. And then if it's a taxable account or not, you're letting us know that here. On the model side, we also do daily monitoring for loss harvesting. So this account's taxable. We're getting tax rates at the account level. From a gains perspective on day one, hey, what kind of tolerance does your client have? Do they have to stay tax neutral? In that instance, we would implement tax neutral. We would reach out if we have to take gains. Do they have a budget to work with? Most accounts are not coming from cash. It'd be nice if they were, but there's always some legacy holdings there, whether that's intentional and by design. Maybe a client wants to hold on to Microsoft and Amazon within this account, or maybe they want to sell them down tax efficiently over time. There's different ways that we can incorporate security level instructions directly here through the platform. And then ultimately, right, you're allocating this to a lead advisor and support staff. So a lot here in terms of the ingestion of key inputs. What our technology is doing is allowing to scale that. We get custom inputs at the account level and scale it for the lifetime of that ongoing management. So you only have to check in, right, when you want to or when there's a need from the client versus having that daily oversight around rebalancing and other implementation needs. So with that, let's close out here. You can see a direct indexing example. Similar workflow. You're coming through the Ethic platform. You could upload a tax lot file. Again, whether this is a concentrated position scenario, maybe your client has held Microsoft, just got off a call with an RA, had this exact use case across a few of their clients. The clients held Microsoft for over 20 years, really low basis. They want to diversify over time. This is where we could run some transition analysis for that client, or maybe it's much cleaner than that. Different scenarios here. You're uploading a tax lot file. You're aligning on a benchmark exposure, tax rates, all that good stuff. We're playing back the current portfolio sitting at $1 million. The current tracking error is north of 3.5% to the target benchmark, which is a global ACWI exposure. So you're not really tracking that exposure today. We're playing back three different paths that could get more diversified, reducing tracking error anywhere from 2% down to 1%. And now you could see the tax impact on day one, right? Does the client want to prioritize harvesting losses and think about that tax impact here? Do they want to stay net neutral? Or do you want to take some gains and get a lower tracking error? There's different trade-offs there. You could drill in, see down to the holding level, what's going on in the portfolio. Oftentimes, for more complex scenarios, our team will join advisors for those client meetings just to play back some of the paths. Um, Importantly, if there's a scenario that you like and the account's linked and funded, if you approve for trade, that flows through to our investment team, and we'll go and implement that account on your behalf at the custodian. Post investment just as important. Anytime that you're implementing any personalized inputs, you need to be able to play back what's going on in the portfolio and why that's happening. So at Ethic, we've built out reporting. This is daily updated performance reporting driven by our custodial feeds. You could see how are we performing versus the benchmark here, a whole host of underlying visuals and data that we play back at the account level. We've automated attribution analysis, which you could drill into. Hey, what's driving underperformance or outperformance in these accounts based on all of the ingredients that we've put in. From a tax perspective, we will play back, hey, what do we reduce your tax bill by year to date based on the tax rates that you gave us at the account level, year over year, what we've harvested in losses in each account, all the way down to a nice trade summary. So, how many trading events have there been this year or since inception? How many were for loss harvesting, days remaining in wash sale? And then a nice summary each time that we're going to trade. Why are we doing it? Was it for a cash raise, a regularly scheduled rebalance, or a tax alpha? And how does that compete with tax and tracking error? So, a good amount of transparency here. I just want to stress the importance of being able to tie back to those initial ingredients and the value that we're adding of having this type of solution versus being in an S&P 500 ETF or an ACWI ETF for the right client profile that needs a bit more customization. You have centralized reporting here as well. You can see every piece of reporting in one pane of glass on this account, and there's a whole host of other functionality on this platform. I'm going to just close out here with one values aligned use case, right? If you have a client that's interested in values alignment, this is where, again, we want to make it personalized. We have an exercise to guide them through the process. Here's a charitable foundation. They're telling us what's important to them versus, us saying, here's a strategy off the shelf. We can get quite bespoke and catered here. We've built out pretty robust solutions on the religious values side as well. But there's a lot of transparency and education happening again to what's important to the client. You have prospecting tools to give insight, a health check. What do you own today? What aligns? What doesn't align? And importantly, similar reporting and that level of transparency that we deliver on the financial side. You could come in for those clients that care. You could see impact metrics. Hey, what's important to the client? And playing that back in really tangible ways. Hey, we could reduce your ownership of carbon emissions by 14 million miles driven. You could drill down to the companies that you divest from and the reasons why. So, Colin, I'm going to pass it back to you with that. That was a lot in a short period, but wanted to make sure that we shared a little bit of the breadth of what we could do here.
No, that was really great. There's one question I have to ask you guys because the one that came in that it was funny the way that it was stated. But I want to just state one thing real quick. You mentioned being on some of the major custodians. For the folks that are dialing into this afterwards, right? This is recorded and distributed to 7,000 or just a bit more wealth management professionals. Please check with your firm. And see, you might work for a large firm or a smaller firm. If you don't currently have a relationship with Ethic, these are the gentlemen to talk to maybe start one. If it is a larger firm, the question is, hey, where is it? Maybe it's already in process, right? And it would be on its way. So just for everybody out there, the good chance it sounds like you might already have one. If not, let's follow up and make sure. I don't want anybody not knowing where to turn, right? We've got some great individuals we can direct you to here with Alex and Anthony, as well as some folks from State Street if needed. That said, this was my favorite one that asked in a while ago. You mentioned that there's over 50 providers now of direct indexing, and we talk about the growth of that in the marketplace. And this advisor is asking and paraphrasing, they've never seen a client that already had access to direct indexing. If we have such this of a growth in the platform, the question really is, are the average clients yet even exposed to it? Because we're not seeing it from other firms. I think that's really interesting because we're doing it, but I've never seen another client already have it. So why don't you talk to a little bit about maybe kind of how this has really spread so far and what the opportunity is going forward?
Yeah, I haven't seen the average client exposed to direct indexing. Where I think it's lived historically is the ultra high net worth and institutional camps. Over time, it's gone down market to that $1 million client that can have a public equity allocation of 150, $250,000. And I think you're starting to see more and more of it, especially with things like fractional shares. A lot of these platforms that do a million things and have this as a component of their grocery store list, that can go down to a few $1,000s, right? And there's different levels of sophistication around it, but I see more and more volume and flows going into this from a tax efficiency perspective, but also from a personalization side, whether it's values or factors or different inputs and ingredients that people want to tailor this for. I think we'll continue to see a rise in this solution. And then from a technology perspective, like the ease of use, I think historically it's been pretty hard because it's outside your day-to-day workflows, opening up an SMA, having a sub-advisor agreement if you don't do a ton of that already, being able to implement it within a UMA infrastructure opens the doors a lot to that.
I'll say as someone who's done this though, you guys have a great technology platform built. Make sure you're using a good technology platform to do this because obviously there's complexities. You don't want surprises for clients. I'll leave it that way, especially when it comes to taxes. They don't typically work so well. All right. I think we're gonna questions. This is perfect timing, guys. We're right up at the sort of top of the hour. I'm gonna take a moment and first of all say thank you to both of you, Alex and Anthony. Really appreciate your time today. Thank you to John Penny from State Street for setting this up. Obviously, we appreciate the partnership with both Ethic and with State Street in terms of what we're building here at the Advisor Network. For those folks who are on session 7 or so of the TAN Virtual Connect 26. Thank you for being along for the ride. We do have some great sessions coming up this afternoon and a full day tomorrow of 8 sessions slotted for tomorrow. So it's going to be wonderful for those of you who are tuning in later. We're watching this on video and repeat. We'd love to connect you. So the information to make that connection will be in just underneath the recording. So we're happy to connect you and hope you get a lot out of this. So, gentlemen, thank you so much. And for everybody else, have a great rest of your day.
Thanks, guys.
Be well.